a lot of bourbon out there. There's been a reduction in new production of bourbon.
I want to know the pros, and I also want to know the risk.
I've never lost money on a return. It's just a matter of every barrel is insured for earthquake, fire, water, tornadoes, meteorite is even covered. In order to be called bourbon whiskey, it has to be at least 51% corn. Most people think it has to be made in Kentucky. That's actually not true. In order for it to be sold on the market as bourbon whiskey, it has to age for at least.
If someone is wanting to get into the space and actually invest, what are some of the things for them to look for, and what are the risks or pitfalls?
You can never say that something's risk-free. That's impossible. This model is de-risked because A, it would be almost impossible for someone to come in off the street and say, hey, I'm going to buy these barrels and invest in it. That would be very, very difficult and extremely risky because it's not just buying them, it's knowing how to.
Chuck, welcome to the show.
Thank you for having me.
I heard you speak at the Family Office Club, and I was just very intrigued. Number one, I'm always open and love learning different ideas about the different ways people deploy their money, invest their money. And you were talking about bourbon, and it was just fascinating around, like, I'm just fascinated on how people decide to grow their wealth outside the typical way, maybe the stock market way. And so you were so generous when I reached out and said, would you come on the show and talk about what you guys are up to, what you've learned, maybe the mistakes and successes that you've had in the past as it relates to this asset class? And you've been so kind to agree. And so I want to welcome you on the show. And our audience loves to learn alternative, different, better ways to growing, keeping their wealth, and I just thought you'd give a really interesting perspective. And so with that, welcome, and I'm excited to learn.
Well, thanks for having me again, and I'll try to answer as many questions as I can within the parameters provided within the legal aspects, if you will. But talking about bourbon, it's one of my favorite things on the planet. I'm from Eastern Kentucky, so shoot whenever you're ready.
Awesome. So with all that, before we get started, I just want to give my own disclaimer. This is for educational purposes only. We're not giving tax advice, investment advice, and see this as educational purposes. If you want to talk to Chuck later about ideas or future potential, go right ahead, but that's not the purpose of this. With that disclaimer out of the way, Chuck, I would love to learn what does it mean to, like, how does bourbon investing work? And if you have some type of like steps or frameworks, like, just give us the state of the union on like how people make money. I'm assuming this is someone that knows nothing about this, that you invest in the ability to make bourbon. It takes a couple years. And so it's a non-liquid deal, but then you sell those bourbon and then you make money and you make some type of rate of return that's not correlated to the market. That's like, if I had to like pitch something, that would be, it's a non-correlated way, and people, whether you like it or not, are going to continue to drink. And so that's the opportunity, but that's all I know.
Sure. Yeah, you're very close on that. I mean, it's an alternative investment asset, of course, like art, automobiles, ball cards, etc. In this particular instance, and I love the fact you used the word liquid asset. I own a significant number of barrels currently that have been aging for a long time. So people say, "Are you liquid?" Oh, I'm plenty liquid. Just don't have any cash. No, it's fairly simple, Caleb. It's having been in this business, and this is a kind of the old boys network, if you will, in Kentucky. I mean, you're kind of in or you're out. I've been in this space for quite a while, and so it's enabled me the ability through these relationships to purchase barrels of bourbon whiskey at various ages and stages in its lifespan. I'll take you a little bit of history on bourbon itself. In order to be called bourbon whiskey, it has to be at least 51% corn. Most people think it has to be made in Kentucky. That's actually not true. I wish it were, coming from the bluegrass state, but no, it's 51% corn is the real mandate, and it has to be aged in a brand new virgin white oak barrel. That's another caveat. In order for it to be sold on the market as bourbon whiskey, it has to age for at least 2 years and a day before you can put it in a bottle. In order for it to avoid having an age statement on it, it has to be over 4 years and a day of age. So there's different caveats. So the real sweet spot in selling bourbon, which is what I do, I buy, sell, invest in bourbon. Primarily, that's my main gig. You're looking at selling it when it's 4 years of age or older. In some cases, there are some people that want to wait until it's much older. Of course, the prices of the barrels were going to be significantly higher at that point, which is great for investors like myself. Right now, what we're doing, the market is depressed, if you will. There's people use the word glut. There's a lot of bourbon out there. I'm quite happy about it personally. What that also means is there's been a reduction in new fill, meaning new production of bourbon during 2025 and going into 2026. So those that are able with contracts like I have to purchase bourbon now at lower than standard market prices, you're sitting in a really good position 4 years down the road when it is most definitely going to be in need. There's a nice IRR to be made there. I won't get into those details on this particular show, but as you mentioned, I'm happy to talk to people later. And I'll stop for a moment and let you ask some questions.
Yeah, I mean, you're going to tease with the IRR. You're not able to give a general range.
Well, I would say that it's over 25%.
Okay. Not investment advice, but you personally, you're shooting for that number when it comes to your own personal investments when it comes to bourbon.
Or higher, yes.
Okay.
For sure. Yeah.
So talk to me. So you have the range of the sweet spot's 4 years. So is it as simple as finding an opportunity, putting money over, waiting 4+ years, and you get it back? How does that all work? And I would imagine also it's like, I'll take myself as an example. I'm not just going to do this myself. Like there's steps. So like talk to me about how someone goes about even doing this to begin with.
Sure.
And I guess I also, in anything, I want to know the pros, and I also want to know the risk. Like I'm assuming these are insured, because that would be a bummer. It's like your liquid asset, which is not liquid, but it is liquid. It would be a bummer if something bad happened and that you couldn't sell that. I would imagine all those things are looked at. Where have people ever lost money doing this the right way, or is it just a matter of not getting as high rates of return? Or I guess there's so many questions I have. I just will let you kind of riff, but those are just a couple that come to my mind.
Sure. I'll address your last question first. I can only speak from my own personal experience on returns, and no, I've never lost money on a return. It's just a matter of how large the return may be. There's been some very significant returns, especially during the COVID years. It was incredible returns, frankly. You asked a question about insurance. Absolutely. Every barrel is insured for down to earthquake, fire, water, tornadoes, you name it across. I think meteorite is even covered in some of the policies just in case. So the real carry costs are, storage and insurance. Those are the two biggies. And of course, barrels have to be stored in bonded warehouses. You have to be licensed to be able to own barrels like this, which I am through my companies. That's another big factor. So it would be almost impossible for someone to come in off the street and say, hey, I'm going to buy these barrels and invest in it. That would be very, very difficult and extremely risky, because one of the larger aspects of this is not just buying them, it's knowing how to offload or sell them down the road. That's where the relationships with like someone like myself, and there's others in the market that have the ability to do that. In my particular case, I have almost 50% of the barrels in the fund that I'm raising for now already pre-sold in contracts. So we've mitigated the risk dramatically there. And that's the way I like to approach it, very methodically, de-risking it as much as possible along the way.
So I guess if you can walk through the steps that your company does from beginning to end. And if you can include some type of cost associated with like, hey, cost this X, Y, and Z, would very much love the case study around the business model in itself.
Sure. So, the acquisition cost of barrels, it fluctuates depending upon mash bill, meaning recipe, who the producer was, where they're stored, where the barrel's toasted, not toasted. All of those things matter. I won't get into the very specifics of it, but let's use a round number. And let's say the barrel costs $700, and I'm going to sell it 4 years down the road for $2,000. You can do the math between. I've already mentioned there's a carry cost in between of storage and insurance, and there's some management fees, et cetera. But you're talking probably $4.50 to $5 a month per barrel. as a total carry cost. It's not rocket surgery, so to speak. You just have to be careful about, the way you approach it, and you have to have your plan in place for, exiting properly at the end.
How long does it take you to get the barrels? Like you said, it has to be more than 51% corn. How is it hard to make this? And is the real value in actually the barrels and storage, or is the real value in like the recipe of making bourbon?
Okay, so I don't make anything myself. I have contracts with the large producers, primarily in Kentucky, but also outside of Kentucky, Indiana, North Carolina, other places. I know what I'm looking for, sensory wise. I know what the market, most importantly, what the market is going to be looking for 4 or 5 years from now, meaning brands. So there's a vast majority of brands, I won't say vast majority, there's a vast number of brands that are non-producers. So they don't make their own bourbon. They buy it from folks like myself and other brokers in the marketplace to use for their brand. So it's important that they maintain integrity of their brand. So if they're using a 75-21-4 mash bill, which is corn, rye, and malted barley, that's what those two segments stand for, then they want to maintain that same mash bill and same producer throughout the entire lifespan of that brand.
To stay consistent with when you buy this brand, that you don't have a different tasting experience.
That's correct. That's correct. And a lot of places, they do want to have different tasting experiences, and they'll have multiple SKUs that they put out. But the majority of folks want to maintain that, the integrity of that same flavor, same profile, et cetera, when it goes into a bottle. For me, it's making sure that the producer is producing a quality product. We have all that testing done. I use a third party sensory group that approves anything before we buy it or I buy it. Don't just rely on my own palate. It's important as well. We also we outsource our accounting firms. For valuations and appraisals, we have other people handle all that. It's not just me. There's other people that involved. Matter of fact, one of my partners is also an attorney. He's my attorney in the bourbon space. So he's very well known and liked within the spirit space. So we check all those boxes, and I would encourage anyone who's looking into doing anything in the bourbon space to make sure that they find a solid attorney that can guide them, and find somebody that knows what they're doing, be that me or somebody else.
Mm-hmm. And so you work with people that make this. Do you provide the barrels, or they barrel it and then you're just selling it to them, creating cash flow for them to be able to do it against? There's almost like three businesses. There's the people making it, selling it to you, and then there's your business that is holding it, storing it properly. It's the waiting game. And then you're selling it to the brand who's paying, in this example, hypothetically, $2,000 for the barrel. They're bottling it up and then selling it for a premium. And would you say that every part of this system is making about the same from an IRR standpoint, or is it where's the real money in this space? Most people have no idea where to start or how to really evaluate whole life insurance. That's why we've built The Vault. It's all of our best life insurance resources and educational tools all in one place, all for free. We have calculators, handbooks, crash course, deep dive videos on numbers. If you want to learn more, click the link in the description or tag comment below to unlock The Vault. All right, back to the video.
So I think it's spread out. I mean, I can't speak for the brands because everyone has their own operational plan. I'm on the board of several brands, and they all operate differently. Some of them have a very high EBITDA, some of them not so much. And it's all based on the other elements within their businesses, right? I think the producers themselves, let's use a Bardstown Bourbon Company, for instance, who I'm very, very close with and I've been working with for a very long time. They make very, very high luxury, I should say luxury, but very high end product. I invest in that heavily. There's others like MGP out of Indiana. They've been doing it for a very, very long time. Good, but we still do our testing along the way to make sure. But when you asked, do we buy the barrels? No. When we contract for like a Bardstown Bourbon Company, I would have already purchased a contract that includes the barrel, includes everything. By the time it gets to me, it's now in a warehouse, in a bond. Goes from the producer into the warehouse. It's going to sit in that warehouse, inspected frequently. The government, as you might guess, keeps a very close eye on this product because they want their tax at the end of the day when it's dumped and bottled. They can tell you where every barrel is, and if there's a barrel missing, you don't want to be in that position. That's not good. Yeah. So hopefully that clarifies a little bit.
Yeah. What's keeping, and is there any companies that do everything themselves? They do like the making, the storing, and the bottling. How common is that? And is the reason why not everyone does that is because of cash flow? I mean, it's a tough business model to produce something, incur the cost, and not get that money, give it 4 to 5 years at a minimum. That's a tough cash flow model.
Yeah, there's several companies. I'm involved in one that provides financing using barrels as collateral. That's become quite a big business outside of your standard lenders. There are some that loan against spirits, but a lot of them stay away from it as they do a lot of alternative investment items. Yeah, you asked, are there those that produce it, bottle it, and sell it? Sure, Bardstown Bourbon's one of them. Almost all of them. That being said, there's still billions of dollars out there on brands that buy it from brokers like myself.
I see. If someone is wanting to get in this space and actually invest, what are some of the things for them to look for, and what are the risk or pitfalls? Um, I had a mentor once tell me that, always look for the mosquitoes. Sometimes they're hard to spot, but if where are the potential downfalls to investing in this? And I know that you're somewhat biased because
And believe me, it's something we look at extremely closely. You can never say that something's risk-free. That's impossible. I like to think that this model is de-risked substantially because I've been doing it a long time. It's been proven. We've been buying and selling and investing these barrels for quite a while with very good returns, higher than what I mentioned previously, I might add. We're being somewhat conservative in this particular approach, but for someone to get into it, they need to find someone like myself, whether it's me or someone else, that can guide them through it. Otherwise, I would say absolutely do not even consider it. Be very careful about who you're dealing with. Make sure that there's a track record. Do your due diligence. Talk to the producers like a Bardstown Bourbon, call their CEO and ask if they know, hey, do you know a Chuck Morton? I mean, you could get that granular, and I would suggest it.
And it's not like the barrels that you have, it's not like you're hoping you can sell them. It's my understanding that it's already set. There's already contracts in place.
Yeah.
And so I'm trying to think worst case scenario, what if these companies go out of business? Well, then you have to find someone else to buy them. How common is that?
With the people that I deal with, it's not common at all. I've knock on wood. I'm going to hate for saying this, but anyone I've dealt with has not gone out of business yet. and I will mention that the company that I'm involved in on the financing side, I think we've been loaning money in the space for about 8 years, and we've loaned well over $100 million in the space, and we have yet to have a default.
Okay.
So I think that bodes pretty well. Again, we're doing our due diligence on who the clients are. We know who has the wherewithal. We know who's been around. We know the characters in the space. And that's a good question. Saying you have them sold is one thing. Having them sold to someone who has the wherewithal to do it, and a brand that's growing, that's another ball of wax altogether. We have that base covered. I feel very confident in that. Yeah.
And then the only other in this is the investor, I would imagine, is not liquid for 4+ years. I would imagine working with someone like you, there probably are ways out if someone needs the cash. They probably, but obviously that's, how do you work and navigate that? And is it one of those things where there's no guarantees, but if there's someone that's a buyer, obviously you'd probably be taking a discount on your investment. but like what are the only, if you had to give me a list of like, here's why you shouldn't invest in this type of business, what would that list be?
Well, then I think number one is, in our particular case, it's a $1 million minimum investment per share, if you will. And so, if you're not a approved investor, then and you're not ready for that type of risk, then I wouldn't suggest it. It could be tied up for a while. That being said, and I can't get into the details. I don't want to give away the special ingredients here on what we're doing, but we are going to be paying out along the way, probably after year one. We're going to be buying a little bit of older stuff as well that I already have pre-sold as well. So we'll sell those at after 1 year, so we avoid some tax after that first year, right? And we get into year 2 and 3, we'll be selling product off, creating revenue and returns for the investors. So we don't expect them to wait 4 to 5 years before they get any money
I hear
back.
you. I hear you. And is there any tax benefits that you guys incur, the investors incur by
I would
investing?
love to say a real strong yes, but not really.
Okay. Okay. That's fair.
Yeah. I mean, I shoot it straight, right?
Okay. Okay. Chuck, is there anything else that I did not mention? I love how simple this is. And, if we had to spend an hour to try to explain something, that's a red flag in itself. What are the things would you feel like are important to mention? And if you're someone who's even like accredited, maybe you'll have 200, $300,000 that you'd want to put towards something like this. Are there groups out there that you can pool your money, or is it pretty strict to like, hey, you need to be a million personal before you even think about this investment? Because as there are people watching this that I know very much are in the buy box, but the $1 million minimum is something that's going to be obviously a turnoff to lots of people who are like probably bummed because they're like, yeah, I wanna write a check and put a couple $100,000 into this thing.
Sure. So I can answer that question. I think you'll like the answer. And we've been asked this before, and we're in the process of working with someone right now. I think it's really just if someone is that interested, reach out. I put them in touch with my partner who's the attorney. They can be an LLC formed that multiple investors can become a part of. What we're trying to do is avoid having 47 different investors on a $25 million fund. It's just, it becomes much, much harder to manage, and more phone calls that
Yeah.
happen. Keep in mind, by the way, this is also very important, for those that would even entertain this space. It's fun. This is one of those investments where you actually, you could call, schedule, come in. We can go to the warehouses and crawl around and sample the actual product that you're investing in. And I can assure you that's a good time. I've been doing that a very long time. It's my favorite. And I don't know anyone I've ever partnered with that hasn't truly enjoyed the process. So there are some other niceties within this type of investment that you don't find in, real estate or other
Yeah,
investments.
it's investment with benefits, right? There's
Yeah,
there's
that's right.
there's some benefits and also there's a social dynamic that you're entering into that I would imagine again, none of this stuff is guaranteed, but I heard this on a podcast the other day, whereas you look at some like private equity, and sometimes it's like if you look at the numbers, it's a bloodbath on how people like you have one winner for every tons of losers. And the person was asked, they're like, "Would you have been better off putting your money in just an index fund?" And he hesitated and said, "Well, maybe, but here's why I'm gonna push back, because the networks and the people and the relationships that I met through the process, so much farther ahead." And I also resonate with that because it's one thing, I mean, it's one thing to get better returns. It's another thing to say, like, am I gonna enjoy this process? Is by me investing in it, is it getting me closer to where I wanna go? And you might have a hard stance against alcohol in general, and so it might
Yeah.
even go against your beliefs in all of that. But I think that is important. That's why I'm drawn to groups like this, to thinking outside the box. And I also love the fact that this is not correlated to the market at all. I do interest rates affect this business at all? Like if interest rates skyrocket, does that lower the returns?
I'm not sure that I'm the right person to truly answer that question, but in my opinion, no. No matter what the economy dictates, people are still going to be consuming alcohol. And you hear language out there and different things floating around the web about, alcohol, intake is down. Well, the truth is bourbon is up 2.9% for the year. in the United States alone. It's up more than that globally, which is, contrary to what most people are reading right now. And I kind of grin every time I read some of these nonsensical articles, frankly, and wonder where they're deriving their information from. But that's fine. It doesn't matter to somebody like me, because you're right, it's not correlated. It's like,
you could potentially make the argument, Chuck, that economy goes down, drinking goes up. I'm not doting that, but it's like during COVID, I would imagine alcohol consumption went up during a time when people are getting paid less, but they have more time on their hands.
It was well over 400% increase, which is why there's now a bit of a glut, because people are overproducing during COVID, thinking this is going to stay the same, which obviously you can't maintain. People actually have to go back to work eventually, right? Since they can't drink all day. But it's kind of like, to answer your question, it's food, drugs, and entertainment. No matter what the economy dictates, people spend money on those. Bourbon falls into all three. It's a pharmaceutical product, really. For me, I'm from Kentucky, and I have lots of joints and aches. So yeah, it works.
Not medical advice. That's one thing I don't usually have to
works for me.
Yeah. Usually I give the tax disclaimer and the investment disclaimer about it, but we're also not giving medical.
No healthcare advice here whatsoever. Don't do it. Yeah.
Chuck, is there anything else that you want to say?
No, other than obviously you can tell I enjoy this space immensely. And, if there's anyone out there that's interested, well, give us a call and we'll see if it's a fit, and I'll see if I can answer any questions, myself, my partners. And we'd love to talk to you. And Caleb, I can't thank you enough for having me on and lending me your time. So
yeah. And anything else that you want to put down below, resources and all, just know that that will be in below. And I would love to hear your comments, and let us know in the comments your thoughts. If there's any questions, we may have to have a follow-up, but overall, I'm very intrigued. And Chuck, I know that we'll be talking offline, but I'm grateful for your time. And might have to come visit. I might have to do a field trip sometime. It's not far. I live in Nashville, Tennessee, so it's not that far away. So we might have to make something happen.
That's a beautiful time in the bluegrass right now. We're hosting, I think, around 10 or 12 very, very high net worth investors early next week. Actually, and we're doing the horse racing and visiting the distilleries, and again, to the fun factor. It's important. I mean, It is for me anyway. So
I love it. Thank you, Chuck.
Thanks a lot. Take care.
Hey, if you're a business owner watching this video, taxes are likely your largest expense. We help business owners all over the country keep more of what they make with proper tax planning. If you're serious about keeping as much money from the government as legally possible, then book a free tax analysis call with our tax team by clicking the link in the description or tag comment below.